In this episode, I'm going to teach you exactly how to use the power of 3. No fluff. I'm going to cut out all the extra bits that everyone tends to add for the marketing. We're just going to keep it as simple as possible. Okay? This is course worthy. If you pay attention to this, you're never going to need another power of 3 video again. So listen in and listening closely. In the power of 3 mechanism, there are only 2 scenarios that will ever occur in the market. The first scenario is bullish, the second scenario is bearish, which just simply means the first scenario is buy program and the second scenario is a sell program. So what will we be expecting? I'm going to type it out for you. When the bias, the higher time frame directional bias, is bullish, on the lower time frame when a candle opens, here's what we'll be expecting. Bullish. We are gonna open, tap into a key level, higher time frame, key level. We're gonna create the low of that candle. Then we're gonna expand, create a high, and then that candle's gonna close. And in the same way, when we're bearish, we're going to open, we're going to tap into a higher time frame key level, we're going to create a high of that candle, typically within the first 30 minutes, okay, or within the first 2 hours, typically, okay, that's for the hourly candle. For the 4-hourly candle, it's typically between the second 1-hour candle and the third 1-hour candle. We're going to create the high of that candle. Then we're going to expand lower, and then we're going to close. Now, here are the things you don't need. You already know the open. You already know the close. Those are fixed variables. The only thing you have to now focus on is the higher time frame key level you're going to tap into, the high of that candle. You need an IFEG. If you don't already know how to use an IFEG, don't worry, it's coming this week. Secondly, if you don't know, go to my YouTube channel. That's all you need. That's the only highest probability entry mechanism you need. Anything outside of that, you're just delaying your journey, but that's you. Okay? You don't need the open, you don't need the close, those are fixed variables. You can simply use a divider tool like this and like this. Now all you have to focus on is, okay, we opened, we're bearish. Higher time frame key level. We expanded lower. That's it. And you're only focused on this area because we're bearish. Now flip that in your head, it's the same thing. So now let me show you an actual example of this. Let's move this chart over here. As you can see, we are bullish. Why? Because when we have a breaker, we also have a chance for optimal entry, trade entry. We also have a dealing range. We also have a breaker block. Simply a breaker block, like in the video that's coming, it's comprised of 4 steps. You have a low, you have a high. You have a lower low, you have a higher high. Then you can expect for the 50% to be rated. So if I mark this out from here to here, what's that? The breaker. So we're going to expect price to retrace towards this breaker. This is where they'll be offsetting their positions out of fear. People may have went long. They see that it's retracing. Oh my God, I'm leaving. And smart money buys. In a buy program, smart money buys sell stops. In a sell program, smart money buys buy stops. So in this scenario, as you can see, now I'm going to break down the anatomy of this candle. This is the 1-hour candle, right? That's the 10 a.m. candle. We have opened low. We are expecting expansion, right? We opened low on the 11 a.m. candle. We are now, and remember, we're at a higher time frame key level. What are we going to look for? Now you could have looked for the breaker right here. That's one. Or you can look for the IFEG as I've told you to. It's right here. Remember, when we close above this IFEG, we enter aggressively. Right here. Or just stop loss go below the IFEG. Right here. Of course, ignore how much there is. Of course, we're not going to be risking that much. But you understand. And simply, that's it. What do? We opened low, higher time frame key level, expanded high. That's it. That's your power of 3. That's all you need to learn. Watch this video back as many times as you need. And I promise you, you have now increased your win rate and your trade accuracy by about 20-30%. Add in a fixed RR, risk to reward ratio, and you, my friend, are going to get a payout this year. That's all from now. If you want the full PDF, I created one. Just comment below PO3 or open high and low close. Just comment below, you need help, and I'll send it to you. Okay? God bless.